Welcome back, Alpha Hunters. The markets are rolling on this Tubular Tuesday, and we're not really seeing too much action across the markets. We've had some pretty good, I guess, different times of price action across some of these different market ETFs. So we'll take a look at that here in just a sec. We got a nice little gap up here on the SPY this morning. So it was led heavily by tech. We did gap up just about 0.1%, but we haven't really done too much since about yesterday mid-morning. I mean, we kind of had some ups, we had some downs by the end of the day yesterday, and then we had a nice little up for the first hour and 15 minutes today. And pulling back here past 15 minutes. So this is kind of where we are. Qs. So this is what led the market early this morning. We had a nice gap up here, 0.25% gap up there on the Qs. And we traded higher. First 45 minutes looking pretty good. Last 45 minutes, we've seen a bit of a rotation out of tech and basically kind of into the other areas, right? You can see the IWM started out weak. A little bit of bearishness there to start the day. Sideways action. Past 45 minutes, past 30 minutes, looking kind of bullish there. Okay, so that's just kind of how the IWM looks. DIA started out kind of weak first like 10-15 minutes there, and then ever since then been trading higher, currently positive. RSP got hit initially on the open, traded down very quickly there versus 15 to 30 minutes, and then over the past hour been trading back higher. So it's been running higher. So you can see how that rotation has been going on already today, where the Qs started out pretty strong there, roughly in the first 30 minutes, and over the past hour, basically it's been rotation out of tech and basically into just about everything else. So that is why SPY kind of not doing as much. I mean, you got a little bit of an uptrend there. For the first hour and 15 minutes, past 15 minutes, not really doing a whole lot. As far as the RSP on the daily, multiple days pulling back here. All right, so we're working on 6 days, 7 days in a row. We had 6 days in a row at yesterday's close of, opening higher, closing lower from the open. Today, well, could be 7. We are trying to make our way back to where we opened. We had a little bit of so far, pretty good lower wick. Obviously, we got through that 20 EMA on a daily, so you got a little bit bigger air pocket in here down to that 50. And, I'd still be wanting to be bullish right now on the RSP. We got a pretty good extended little pullback here, but I think we'll probably have it. I'd imagine we'd probably do at least push higher going forward. DIA looking a little bit better. We did break that little lower wick back from December 3rd yesterday. We held below it, kissed off of that 20 EMA today. Maybe that's where the DIA bounces and probably continue to push higher. Makes sense. Same kind of deal here with the IWM. Came into that 20 EMA today. But yeah, some of these, even though they've been pulling back here for the past week and a half or so, it's kind of a flat pullback. It's not like what we had here in kind of mid-November where you had a strong little pullback. It's just kind of more of flat out to the side, kind of like a flag pattern. I'd be a little bit more bullish on some of those areas. The Qs, a little bit of gap up, kind of still sideways, possibly just resting, waiting for the moving averages on the daily to kind of come up and push us higher. Same kind of deal here with the SPY, kind of just hanging out just above the 10 EMA. That is how some of the market is moving today. As far as the VIX, still just kind of hanging out below 15 at around 14. So not really doing a whole lot there. DXY dollar index. So kind of talked about this yesterday, and it was an interesting situation of trying to play this possible head and shoulders down. Possible head and shoulders down, right? You got the shoulder, neckline, head. You had the neckline break, and you had the shoulder that came in. And we talked about, last week taking that bearish, trying to take that shoulder bearish. And a big reason why I said that, and I kind of mentioned in the market outlook at the end of last week, is that this could be possibly, and what sometimes you do get on head and shoulders is an ABC correction, and then you go back higher. And that's why I typically like to try to play those shoulders bearish. Because if you do get the rollover and you get this C wave movement down and you break that neckline again, you just break the neckline and it's just an ABC correction. Well, I would much rather be bearish here and not bearish on that breakdown. Because if you're bearish on that breakdown and then you get right back above it, then then you probably have you have your stop loss there from getting in here, and then you're going to take a full loss rather than trying to be bearish here with a stop loss up above the head. And then if it comes down and breaks the neckline, then you can move your stop loss basically to your entry point, or roughly. You'd probably take a little bit of a loss if it winds up just jumping back up and taking out that shoulder. And it looks like it's going to do that now on the DXY. So that is why I do prefer to try to take those shoulders bearish, because if you do get that breakdown on the neckline breakdown and you get that quick retest and it continues, you're way ahead of the game at that point in time. But it's all about managing the risk on the trade, right? This one looks like it's probably just going to be an ABC correction, consolidation, pushing higher, resting kind of pattern that kind of plays out. So yeah, if you were trying to take that bearish from that shoulder, I'd probably just be looking to be out of it now. I think you could probably wait before you get in bullish. You could try to go bullish, sure, you could, but I would definitely want to see it break above these two little highs that we had over the past, basically last week's highs. GLD Gold Trust. Yeah, it was a strong move yesterday. We did try to come down. Kind of mentioned that yesterday. It'd be interesting to see if we did wind up coming down. I'm going to go to the futures because that has much more of the intraday action. Because we had this strong move higher that we got above the past basically week and a half highs. And I kind of mentioned if we come back down by the end of the day, now we didn't come down all the way, but I kind of mentioned if we come all the way down, it would set up a really nasty looking upper wick kind of situation where maybe you do see gold break down again. It didn't come all the way down. It kind of held up, kind of strong. And you gotten the follow through, continue higher today. So I think for now, you're probably just in on gold. Like I've mentioned before, I'd rather be bullish on pullbacks. And that's about it. So I don't really want to play anything bearish just because gold's been so strong now for a little bit over a year, about 14 months. It's been very, very strong. So 10-year yield. 10-year yield. Yeah, it's climbing a little bit today. Obviously, we're going to have two major points that are going to be very important. Obviously, getting through that 20 EMA and this little upper wick that we put in last Wednesday. Other than that, I'll just keep an eye on seeing what's going on there with yields. We got 10 and 2 inversion, kind of just hanging out, not really doing anything today. HYG, interesting. So, kind of mentioned this yesterday. With yesterday's price action and trying to play this possible inverse head and shoulders bullish, and we're not really continuing higher. And that's kind of a problem. So if you're wanting to definitely play this, and definitely kind of mentioned this last Monday, we had this huge bearish day that came in following the Thanksgiving week, kind of super strong bullishness. When we got this pullback into the moving averages, it's like, okay, you want to try and be bullish off that. So now in assessing what we looked like yesterday and today, yesterday we didn't look great. Like you wanted to see us continue higher coming from Friday. Friday we're looking pretty good, but you want to see us continue higher. You wanted to see it happen very soon. You needed this to kind of get the pop, get that breakout, get that continuation. We're not seeing it, and I'm just kind of losing confidence on the bullish side here, because like if it doesn't work quickly, I'm not really one to say that I'm willing to give it as much time as possible. Like you're probably up a little bit here compared to back in like last Monday if you're getting in on those kind of pullbacks, even Monday, Tuesday. And now it's just kind of riding above the 10 EMA for much of the past week. I'd be much more willing to just kind of cut bake on it and take whatever you got, even if you got a little bit of a loss, whatever it is, because it seems like we might be set up for a little bit of a drop here because we're not getting that continuation. If it doesn't work soon after you kind of get in and you can start to consolidate, then at that point in time, then you've lost momentum, right? And that's basically what Monday and Tuesday this week are kind of saying. They kind of lost momentum. LQD pulling back in that 10 EMA. Okay. Yeah, I'm probably going to bounce off that 10 EMA. Maybe we already did get it this morning. Nah, not really. I would say we probably pushed a little bit higher there on the LQD. As far as the TLT, yep, pulling back as well. And that might have been, I mean, this might have been that bounce. Really, we were kind of talking about, we were maybe hoping to get over here back in like late October. A nice strong bounce, and then roll over. This might have been it. But yeah, I mean, it looks, we've dropped off pretty good to start the week here on bonds. All right, so we got sector rotation. It'd be interesting to see how this looks for the day. Communications doing very well. Okay. Discretionaries, energy's doing well. Staples, financials outperforming a little bit there. Industrials in line with the market. Healthcare underperforming. Materials, utilities, tech, real estate at the lower end of the day. Okay. As far as intraday price action, so this is going to be the interesting one because we saw some pretty good rotation so far going on for the day. And you see communications and discretionaries are actually doing really well first roughly 45 minutes of the day. You saw them pull back, and then you saw a lot of other things started uptrending since that point in time. So there you go. Discretionaries, though, looking pretty good on the day. Communications, staples, industrials, financials, all outperforming pretty good. Energy's kind of in line with the market there. Materials, utilities, tech, healthcare, real estate, all underperforming there on the day. Energy actually had a pretty good climb back. They were actually down pretty good, underperforming quite a bit there in the first 40 minutes or so, 35, 40 minutes of the day. And you can see that run that Energy's had to get back to basically kind of neutral, at least on the intraday price action.